Welcome to Counters. In this lesson, we're going to be looking at the cash budget. We're going to go through a thorough example, and I'm confident that after this lesson, you should be able to do a cash budget on your own. Why do we do the cash budget, or what is a cash budget? This is when we estimate cash flows over a specific period of time. And it is very important to remember that we are estimating cash flows, and so we are dealing with actual movement of cash. So anything that is not cash will not be dealt with in the cash budget, and it's over a specific period of time. So whenever you're asked to do a cash budget, you'll be told for which months or for which years to do the cash budget for. And why do companies do the cash budget? Well, companies do this in order to ensure that they have enough funds within the business to operate. So when you do the cash budget, you're looking at what is the cash flows during that specific period over which you are doing the cash budget. So let's go to the example. In this example, we are told that Seal Limited had sales of 100,000 Rand in January, 800,000 Rand in February, and 90,000 Rand in March. And we're also given the other information. And at the bottom here, we are asked to prepare the cash budget for Seal Limited for the months of April, May, and June. So there we have our periods. We are asked to do it for April, May, and June. And that is the only months we're going to focus on. So how do we do the cash budget? This is the table that we're going to use. We have a table, it's written cash budget. We have the details on the left, and we have our 3 months on the right, April, May, and June. What is the first thing that we do when we look at the cash budget? We will have our opening balance. So what is our opening balance? So let's add opening balance there, and let's look down here. We are told in additional information that the company had a cash balance of 20,000 Rand on the 1st of April. So we'll put that under opening balance on April, 20,000 Rand. Now for May and June, we don't have the opening balances, and the reason for that is because we have to complete the cash flows for April, and the closing balance for April will be the opening balance for May. And likewise, the closing balance for May will be the opening balance for June. And that is why we don't have for May and June. So always remember that you will usually be given the opening balance for the first month. So let's move on to the next thing. What do we have? Well, we have sales. We're told here that Seal Limited had sales of 100,000 Rand in January, 80,000 Rand in February, and 90,000 Rand in March. So those are some of the sales, and we are told what the forecast sales are for the months of April, May, and June. It's very important to always remember that you are dealing with cash here and not anything on credit. So we have to deal with the cash movements here. So we look at the details like this. 40% of the company's sales are in cash. So what is the first thing that we're going to do? We're going to do sales, cash sales, right? This is the sale that we will have in April, May, and June, and we'll receive the money in that same month. And then we'll also have sales, credit sales, where we'll receive the money in April, May, and June. But we'll look at that a bit later on. But let's look at the cash sales. We're told that 40% of the company's sales are in cash. And we're told that the company's forecast sales for the coming months are as follows. April, it's 110,000 Rand, May, 100,000 Rand, and June, 120,000 Rand. So we know that 40% of that will be paid in the month of sale. So we're going to take 110,000 Rand for the month of April times the 40% to get the cash sale for that month. It gives us 44,000 Rand. So we'll put that 44,000 Rand under April, and we'll do the same for May and June. So May, the sales forecast is 100,000 Rand. Multiply that by 40%, and it gives us 40,000 Rand. So we put that under May, and we do the same for June. 120,000 Rand times 40%, which will give us what the cash sale was, 48,000 Rand, and we put that under June. Now you can see how a simple exercise this is. Whenever you're given the sales forecast or the sales for the months you have to do the cash budget for, always look in the information and see how many percent of those were in cash, and you'll take that and put that under sales and then cash. And then we move on to the next one. Remember, if 40% was on cash, we know that 60% was on credit. Now we ask ourselves the question, when will that be paid? Whatever will be paid in the months in question, or in the months at which we are doing the cash budget, April, May, and June, we have to include that because that will be our cash inflow. So if you can see down here, we're told that the trade debtors or credit sales are collected as follows. So now this is the 60%. How is it collected? We're told that 20% during the month of sales, 50% during the first month following the sale, 20% during the second month following the month of sale, and 10% during the third month following the month of sale. Now, I hope you can see from this that we have to do what is called the debtors collection schedule, or the credit collections. And if you'd like to check that one out, we have a video specifically for that, which helps you understand how to do the credit collections. It's a very simple one as well. So if you'd like to check that one out, you can find the link in the description below, or you can click the link on the top right of the screen right now. But here's the table that we'll use to do the debtors collection schedule, for you to know how easy it is to do that. So I've already drawn the debtors collection schedule, and I've already plugged in the months there just for the sake of time. And you can ask yourself the question, why do I put January, February, March, April, May, June? Well, because we might collect some money from January in April, and we might collect some money from February in April or May, and we'll see that just now. We are told that during 20% is collected during the month of sale. So if the sale happened back then in January, 20% was collected, and then 50% was collected during the first month following the sale. So it means that 50% of January's sale was collected in February, and 20% during the second month following the month of sale. It means 20% of January's sale was collected in March, and then 10% during the third month. So that means that 10% of January's sale will be collected during the third month, which is April. And that's why we have January here. We want everything that affects April, May, and June, because we are doing the cash budget based on these 3 months. So we'll just run through this. If you'd like to see a similar example, like I said, you can click on the link in the description below. So for January, how much was the sale? The sales for January was 100,000 rand, and 10% will be collected in the third month following the month of sale. We are not concerned with these three because 20% was collected in January, 50% in February, 20% in March. We're only concerned with what happens in these 3 months, and we know that 10% during the third month following the month of sale. So we're going to take 100,000 rand, which is the sale for January, and we're not going to multiply that by 10% yet, because we know 40% of it was cash. So we want the 60%, which was on credit. So we take 100,000 rand times the 60%, which was on credit, times the 10%, which was collected in the third month following the month of sale, which is April, and it gives us an amount of 6,000 rand. So we put 6,000 rand there. And then we do the same thing for February. We are told that 80% is in February. That was the sale in February, and we know that 40% was in cash. So we know 60% is on credit. So we want that 60%. So we say 80%, 80,000 rand times 60% times the 20%, which was collected during the second month following the month of sale. So that is February's sale. The second month following the month of sale is April. So that 9,600 goes to April. And then we move on to March. 90,000 rand was the sale in March, and we know 40% was in cash, so 60% was on credit. So that's what we want. So 60% of March sale is on credit. How much of it will be collected in April? Well, we are told here that 50% is collected during the first month following the month of sale. So 50% of what was on credit from March sales will be collected in April. So we take 90,000 rand total sale times 60%. That's the total which was on credit, times 50%, which should be collected in April, which is 27,000 rand. So we put 27,000 rand down there. And then we move on to April. Now we are in the month in question. That's why we have April also here. So we know that in April, 110,000 rand is forecasted as the sales, and we know that 40% is on cash. So we've dealt with that one already. And then the 60%, which is on credit, we know that 20% of it will be collected in April. So we have 110,000 rand sales times 60%, the total credit sales, times 20%, which will be collected in the month of sale, which is April. We get 13,200. So we put 13,200. So we are done with April. We have done everything that we needed to do in April. Now the rest we'll do now for May and June. So for May, will anything from January be collected in May? Well, we can see 20% will be collected in the month of sale, that is January. 50% will be collected in the first month following the month of sale, that's February. 20% during the second month following the month of sale, that is March. And 10% during the third month following the month of sale, that's April. So we can see that January's credit sales do not affect May. They will have been all collected by April. So we have nothing there in January. Now February, we know that 10% will be collected during the third month following the month of sale, and that is February, March, April, and May. So March, April, and May So we know that 10% of February's credit sales will be collected in May. And we do the exact same thing we did for January. We take February's total sales, 80,000 Rand, times 60%, the total credit sales, times whatever will be collected in May, which is 10%. We get 4,800 Rand. So we put 4,800 Rand in February. And then how much of March's credit sales will be collected in May? Well, we know it's 20% because that's during the second month following the month of sale. So how much were the sales in March? The sales in March were 90,000 Rand. So we take 90,000 Rand times 60%, that's the total credit sales, times 20%, which will be collected in May. We get 10,800 Rand. I hope it's making sense as we go along. So I'm just going to speed it up right now. And then how much from April will be collected in May? Well, we can see here 50% during the first month following the month of sale. So we take April's total sales, 110,000 Rand, times 60% times 50%, which will be collected in May, is 33,000 Rand. So put 33,000 Rand. And then May's credit sales, how much of it will be collected in May? Well, it's 20% because it's during the month of sale. So we take the total sales for May, 100,000 Rand, times 60% times 20%, which will be collected in the month of sale. It gives us a total of 12,000 Rand. And there we have just completed May. So let's go to June. So now we know that nothing in February will be collected in June because it will be all collected by the month of May. So we know that 10% of March's credit sale will be collected in June. So we take March sales, total sales, 90,000 Rand, times 60% to get the total credit sales, times 10%, which will be collected in June. We get 5,400. And then for April, how much of April's credit sales will be collected in June? We know that it's the 20%. So we take 110,000 Rand total sales for April, times 60%, times 20%, which will be collected in June. We have 13,200 Rand. We'll put that down. And then May's credit sales, how much of it will be collected in June? It's 50%. So we take 100,000 Rand, which is May's total sales, times 60%. That is the total credit sales, times 50%, which will be collected in June. We put that 30,000 Rand over there. How much of June's credit sales will be collected in June? Well, we know that it's 20%. So we take total sales in June, 120,000 Rand, times 60%, which is the total credit sales, times 20%, which will be collected in the month of sale, which is June, 14,400. So we have just done June. So we are done with the debtors collection schedule or the credit collections for the month of April, May, and June. Now what we have to do is total them up. So we know that these are the cash inflows from credit sales that will be collected in the 3 months. So what we have to do, we have to put it in our cash budget. So we're going to take our the cash inflows from debtors collection schedule and put it in our cash budget. So we're going to put sales credit so that we know that this is from the credit collections. And then we put these totals here, 55,800, 60,600, and 63,000 in their months. So we put that down. And then we move on to the next one. Here we are told that the company anticipates other cash income as follows. So here we go to other cash income. We have for April, May, and June. So we have to include that in our cash budget because that is cash moving in or coming into the business. That is a cash inflow. So let's put that down. Other cash. The description doesn't really matter if you had written other cash income or other cash. That doesn't matter as long as you're doing your cash budget correctly. And then we put the 3. So we put them all there. So we are done with that one. And then we are told that the credit purchases for March amounts to 60,000 Rand. So you can see from here going down, these are just purchases and expenses. So what I like to do when I'm doing the cash budget is to just have my total income or the total cash inflow down here so that it's easy when I calculate the final figures. Even if you don't do it, I don't think you'll be penalized for that. So I put cash available, and what that means is that I'm adding up all the inflows or the cash that we have received during the month and putting the total down here. So I'll put down the one for April, so I add them up together. It comes to 129,800. Now for May and June, I'm not gonna do them as yet because I don't have the opening balances. Remember, like I said, the opening balance for May will be found from the closing balance of April, and the closing balance for May will be found will be the opening balance for June. So we'll wait until we get the closing balance for April, then we'll be able to get the rest. So now that we have totaled that up, let's look at the credit purchases, we're told that the credit purchase for March amounted to 60,000 Rand, and the forecast for the next 3 months are as follows, and we are given the forecast credit purchases for April, May, and June. And what is important is here, 50% of credit purchases are paid in the month of purchase, and the balance is paid in the following month. So you're paying 50% in the month that you have done the credit purchases, and you're paying the remainder 50% in the following month. So that should be easy. So let's draw a table similar to the debtors collection schedule called the credit purchases, which will make it very simple. So we'll just run through it quickly. Now, how much of March's credit purchase will be collected in April? Well, we know that in March 50% was paid of credit purchases was paid, and then in April 50% will be paid. So we take the credit purchase for March, which is 60,000 Rand, we multiply that by 50%, and we get 30,000 Rand. So that is how much will be collected in April for March. And then in April, how much will be collected in April, how much will be collected for April, for the month of April? Well, we are told that 50% is collected in the month of purchase, and we purchased 50,000 Rand worth of purchases in April, so we'll collect 50% of that in April. So we'll take 50,000 Rand times 50%, we get 25,000 Rand. So we put down 25,000 Rand. We just finished with April, so this one is a simple one. So, and in May, we know that we have finished collecting the one for March, because we collected 50% in March and 50% in April. And for April, we've collected 50% in April, and the remainder 50% will be collected in the following month, which is March. So what is the amount for April? It's 50,000 Rand. So with 50,000 Rand times 50%, we get 25,000 Rand, and that's how much will be collected in May. And how much of May's figure will be collected in May? We know that it's 50%, so we take the May's amount, 40,000 Rand, and we multiply that by 50%. It gives us 20,000 Rand, and we put down 20,000 Rand. And we've just completed the collections, or the payments for April, the credit payment for April. Always remember that these are credit purchases that we made as a company, so we are paying out. So this is an expense going out of our business. And then in June, well, we're not collecting anything from March because we've collected it all in April. We're not collecting anything from April because we've collected all by May. And then how much of May's amount will be collected in June? It's 50%. So we'll take May's amount, which is 40,000 Rand, times 50%, and we are paying 20,000 Rand of May's amount in June. So we'll put 20,000 Rand there. And then June, how much of June's amount will be collected in June? It's 50% again. So we'll take 40,000 Rand for June, the purchases that we made, times 50%, and we paid out 20,000 Rand for June. And we've just completed the credit purchases. That's how easy this one is. So we just total those up. So we just total them up, and then we go back to our cash budget. We put the purchases, and then under purchases we put down the totals that we have here. But remember, we're putting them in brackets because it's a cash outflow. It's money that is leaving our business, so we put the amounts there in brackets, and then we move on. The rest should be very simple. We are told that rent paid amounts to 5,000 Rand per month. So this is rent for each of the 3 months that we are doing the cash budget for. So we'll put the rent, and we'll put 5,000 Rand for each of the 3 months, and we'll put them in brackets because it's a cash outflow. And then we're told that salaries and wages amounted to 20,000 Rand per month. We do the exact same thing we did for rent. So we put salaries and wages, and we put 20,000 Rand in brackets for the 3 months. And then we're also told that an interest payment of 5,000 Rand is due in May. So this is just specifically for May, so nothing in April and nothing for June. So we put interest expense, nothing for April, nothing for June, but in May it's 5,000 Rand like we are told. And then we're told equipment valued at 7,500 Rand will be purchased in cash in April. So they have put equipment purchases or equipment purchase, and it's only in April, so we put down 7,500 Rand, nothing in May and nothing in June because we are not told of anything with regards to equipment for those 2 months. And then a trading fine of 10,000 Rand is payable in June. So it's not in April, it's not in May, it's in June. So we put trading fine, and we put it under June, 10,000 Rand in brackets. So you can see we've put all our expenses in brackets, all the cash outflows in bracket. And then we have just completed the cash budget because that is the last one that we have just done. So what we do, we put our closing balance at the bottom. So we put closing balance, and what we will take, since we have already totaled up the cash available, We're going to take the cash available and deduct all these expenses, or all these cash outflows. We'll deduct them to get our closing balance. What you could have done as well, you could have totaled up your cash outflows, all these ones in brackets, and put it down here. Well, I didn't do it, but you could have done it for the sake of simplicity, but it does not matter as long as you do your cash budget correctly and your closing balance is correct. So I just took my cash available and minus all these expenses or cash outflows, and we get the closing balance of 42,300 rand. Now we go to May and put our opening balance. Remember, like I said, our opening balance for May is the closing balance for April, so we put 42,300, and then we can now have our cash available. We add them up together, we get the cash available of 154,900 rand. And now that we have our cash available, we can deduct all our expenses, so all our cash outflows, to get our closing balance for May, and it's 79,900 rand. And we take a closing balance for May and put it as the opening balance for June, so we put the 79,900 rand there, and then we get our cash available. We add up all our cash inflows, we get 201,900 rand, and we deduct all our cash outflows, we get 126,900 rand, and we have just completed our cash budget. So you can see how simple doing the cash budget is. Always remember, cash budget deals with cash flows, only the movement of cash, and we're dealing with these 3 months specifically, so you're paying attention to what is happening in these 3 months. I hope that has helped. I hope it has made sense. If you have any questions or any queries, you can leave them in the comment section below. Otherwise, if you have learned something from this lesson, if you have gained value from this lesson, please leave a comment down below and let us know. Also, let us know what level of education you are at, and subscribe to our channel and like our video and sharing our video if you can. Till next time, cheers.